Welcome to our mid-year market review and forecast. And a lot to cover tonight. I'm Josh Wilton. I'm co-owner of Queenston Realty, Princeton Property Management, Princeton Home Connections, which is an ADU company, and Princeton Abstract, which is a closing services and title company. So really what we're here to do is talk to you about the market. We don't have an agenda really other than research and presenting research. So wanted to make sure that you guys are on par with what's happening in the market. That's really the agenda tonight. Don't care when you buy, don't care when you sell, just what's happening. Okay, so let's look at the national picture. So inventory has been probably the biggest issue since the pandemic hit. When the pandemic hit, people stopped selling their houses. Interest rates came down to the point of high 2s and 3s. Over 85% of homeowners in the United States have interest rates below 4.5%. So making it very cheap to stay in your existing home. So what would happen is, life happens, birth, death, divorce, promotion, demotion, people move. And after the pandemic, people stopped moving because it was cheaper to stay put. So from June 2024 to June 2025, you can see nationally that more inventory came to the market, which is a very good thing. And obviously in Florida, there's, some dense inventory. Southern California, some dense inventory has come to the market in the last year. So overall, you would think, wow, things are looking better. However, we're still well below pre-pandemic inventory levels on a national basis. So in 2025, we're below 2019, 2017, 2018 on a national level. Same thing in New Jersey, same thing Princeton. However, things are improving. Here's another view of what's happening nationally. By the way, this is from a gentleman called Lance Lambert, who runs a firm called relocating. All he does is real estate research. So he can be followed on Twitter or X, whatever it is, and LinkedIn. He's not on the other two social media channels. So you can see of June 2021 was the apex low for inventory in the United States. And you can see June of 2025, we're back to 1,082,000. However, it's not spread out evenly. So what does that mean? It means Florida has inventory, a lot of it, for different reasons. Texas, inventory. Some of the southern states, inventory. Some of the western states, inventory. They have land, they can build, they have available land, and we cannot. So when you look at it, we are still significantly behind June 2019 in inventory. New Jersey is about 60% behind, Chicago 61%, Hartford 74%, Virginia Beach 51%. So even though it's getting better, it's still not great in terms of supply side. So what this looks at is some of the fastest growing the inventory across the country that is growing the fastest. So Austin, Texas, for different reasons. So Austin was like the dream child. Texas was the new Silicon Valley until Silicon Valley decided to pull everybody back to California and left Texas. So, people are relocating to Texas. It's a net growth state. However, they built faster than people were moving in. It's that simple. So a lot of inventory in Texas. Denver, same thing. These are all the states where people during COVID moved and are now moving out of. It's basically what it is. It's a very sort of boom bust sort of state. So they have the fastest growing inventory nationally. And then if you look on the top right, Newark, Jersey City, that's us. And we are laggards, not in inspiration, just in execution for inventory. It is what it is. So again, the Northeast is really lagging behind. So you can see Baltimore, Virginia Beach, Providence, just lagging behind, the Philadelphia corridor. And Princeton, Mercer County is like half Philadelphia, half New York in terms of how they count the housing. So again, when you look at the national picture, June 19 to June 2025, it's not much better in New Jersey. We're still down about 60% pre-pandemic inventory. It's getting better, definitely, but it's not where it was. And the issue is things are twice as expensive. So we'll talk about that when we talk about the forecast. So that's sort of the national picture. When you look at the local picture, New Jersey's unemployment rate has been relatively unchanged. It's at 4.9. When I did this presentation in January, it was 4.7. So it's somewhat unchanged. When you look at our local unemployment rate, it's 4.6 in Trenton, New Jersey. And again, if you went to South Jersey, it's in the 8s. So if you're wondering where the jobs are on train lines. I always tell people, I told somebody today, to an investor, when you buy real estate, buy it on a train line or buy next to a university. It's just the safest long-term equity you can get. So when you look at the southern part of the state, the balance of the unemployment, the high unemployment is unfortunately in the southern part of New Jersey. So New Jersey's unemployment, New Jersey's net jobs, it's sort of flat for the year. It had been growing into 2025. So in the last 12 months, New Jersey's added 23,500 non-farm jobs, with 82% being private. So overall, pretty good economic news in the state, more or less, I would say, unchanged. So looking at New Jersey, okay, so now we're going to kind of start dwindling down from the national picture, because who really cares about California, even though my daughter loves it there and will probably live there. In New Jersey, right, year to date, single family homes are only up 4%. That's not a lot. It's like 1,000 homes spread across the state of New Jersey. So they were expecting much more than that. However, it's kind of coming in slowly. That being said, in June over June, 24 to 25, it was 5.1% growth for single family homes. So, closed sales are up 4%. The big number I'm going to be talking about is average sale price. And this is, if you want the forecast, home buyers, to an extent, are priced out of the market. So what does that mean? It means they're going to be more cautious. So that, we'll talk about that in a little more detail, but you can see the median price from June 2024 to June 2025 went from 585 to 625 in single family homes. That's a massive jump. So it's not like there's been a relief in pricing in New Jersey, a little more inventory, but not a relief in pricing. Some good news for buyers in the townhouse market. June to June, 16% growth in inventory, 13% year over year, which is good. We could use it. Trust me. There's definitely some new construction at play in that across the state, which means it's not exactly affordable. However, the median sale price came down in June to June, 1.4%. So is that positive? You could say not if you're a seller, but overall from an affordability perspective, yes, it's better, right? Because affordability is the picture of the future for the residential real estate market, with rates being where they are. The adult community, interestingly, is up 25% June to June and 14.5% year to date against 2024. So more people in the 55 plus market are moving for different reasons. But again, it's not like we're getting a break in the median price, which is up 8% June to June and 5.4% year to date. So we've seen no relief in pricing thus far in the market across the state of New Jersey. Now, when you look at Mercer County, it's more or less the same picture. Year to date, only 1.2% up in single family homes. Condo and townhouses, however, 30% up. Now, what is that? Not a lot. There's a fair amount of new construction. There's jobs in West Windsor. There's jobs in Hopewell. So there's some new construction in the market. So it's better. It's just that they're prohibitively expensive. So despite the new inventory, year over year, you've seen almost a 5% gain in prices. So some relief on the horizon for buyers in that segment. And again, the adult community is up 12.5% in terms of inventory in Mercer County. But again, that's 108 versus 96. It's statistically negligible. It's not like we're breaking through and the market's opening up. It's still very, very tight in Mercer County. Somerset County actually is worse than Mercer County. The single family home was only up 1.6%. And in June, it was down 6.8% June to June. So if you're a buyer in Somerset County, it's tough. It's really tough for single family home buyers in Somerset County. Again, about the same picture in condo townhouses, about 12% up. Adult community, 20% up. But again, that's 129 versus 107. That is not enough to say, wow, the market's like back and rolling again. It's not. It's just 22 more people decided to sell their house in the first 6 months of this year versus last year in the 55 plus community in one of the biggest counties in the state. So there's not palpable relief coming, but it is getting better. Like inventory is getting better. Middlesex County, single family homes, new listings, 10%. Now, Middlesex County is interesting. It's incredibly dense. You have New Brunswick, which is a college town. You have train towns. You have South Brunswick. It goes all the way almost to the shore. So it's a very dense state. It's also one of the fastest growth job counties in the Northeast corridor. But again, look at the townhouse condo market, 70% up. June to June, 24 to 2025, and an 84% shift when you look at June only, 344 this year versus 186 last year. So what does that mean? It means people are on the move. Finally, it means people are starting to move. I've always said real estate is just a reflection of people's lives. You have a baby and you move out of the condo to the townhouse or the small single family. You get married, you move. You get divorced, you move. You get that big promotion, you move. You get relocated, you move. You retire. You tend to move eventually, right? People die. The estate gets sold. So real estate really is just a reflection of the life cycle. And that has been on hold. That was inevitable. It would take effect. It is taking effect, albeit very slowly. The Middlesex 55 plus market is starting to break through. It's up 31% year over year, 658 versus 500. And what you can see, it's up 31%. But as these things go up, right, so do the contracts. So closed sales up 13% for 55 plus, 35% for the condo townhouses. So people have been waiting for stuff to come on. They're getting their chance. They're jumping on it. They're buying home. So that's sort of the national, state, and county picture. We're going to kind of take a look at the local markets because at the end of the day, your neighborhood is different than the next neighborhood. Your street is different than the next street. Lots are different. Everything's different. So we're going to kind of go into that. So that, you know, in 2018, when I gave this presentation, I said these are the biggest things that drive the real estate market in our Tri-County area. And, you know, Plainsboro is Middlesex County. I consider it part of Mercer. But we were comparatively affordable in Mercer County in 2018 as compared to Bergen County, as compared to Hudson County. So affordability was a big driver of the market. People were willing to come down here to West Windsor, take that train to New York because it was comparatively affordable, right? So that was 2018. So 2024 and 2025, affordability, meh, not so much. Are we affordable compared to Bergen County? Yeah, but we're not really that affordable, just so you know. The home price appreciation has outpaced employment, meaning has outpaced income. And that you're going to see coming for the second half of the year, in my opinion, if rates continue to stay high. So at the end of the day, locally, I think schools and jobs are the two main drivers. Mercer and Middlesex County are huge job centers and growing. We have the train, Midtown Direct from West Windsor, from Hamilton, from Trenton. You can get to Philly easily. You can get to Washington, D.C. easily. I know people who commute there a few times a week. So access to jobs is paramount. Train lines are paramount, despite everyone's frustrations with New Jersey Transit. And then, you know, the other reality is we have some of the best schools in the state in Mercer County, in Mercer, Middlesex County. So affordability, not really. So let's look at a school in West Windsor, Plainsboro, A+. If you look at niche.com, highly rated district. Pretty much every school in the West Windsor district is A+, like middle school, high school, the whole shebang. So if you look at the year over year through second quarter of West Windsor, in 2019, 338 homes were listed in West Windsor through the end of the second quarter. The low point was 2023 with 121. We're back up to 200, which is awesome. Closed transactions in 2019, 158. In 2023, it was 86, dropped to 81 in 2024. We've basically come to 116, which is much better than last year. But the value of the homes has gone from 576 median to 817 and counting. So even though inventory is coming on, we're still in an undersupply segment. And there's still upward pressure on home prices in Mercer County. Hoping that eases in the second half of the year. We'll talk about that. So when you look at West Windsor, right, this is through second quarter only. So this is the single family average sold price through the second quarter since 2012. And you can see, but like I said, in 2018, it was 661 for a single family in West Windsor. Now it's 951. Last year, we ended over 1 million in West Windsor for the first time. So when you go back to that slide, when I said affordability used to be a big driver, it was. I'd say schools are a bigger driver than affordability in West Windsor today. Oops, excuse me. So the good news is units sold were at 85 versus 62 second quarter to second quarter. we're below, right? 119, 121. So we're still statistically significantly below normal, but it's getting better, right? So there's more housing coming on the market, more of it's selling, more people are moving, more contractors are working on houses. So everything's shifting to normal, and that is the forecast. It's going to be a return to normalcy. So days on market up slightly to 29, well below normal of 65, 62, but more than double of 14. More than double, like, and by the way, 14 really means like an hour, like, because, you know, it's 14 days to the contract means it was negotiated in the first couple of days. So 29, it's getting slightly better. As a buyer, you still need to be on the jump. As a seller, don't overprice your house. You will sit. So list to sell price ratio, again, in 2023, it was 103%. It dropped to a really low of 101% for single families in West Windsor. So if you bid below that statistically year to date, you weren't getting a house, in case you're wondering. The condo townhouse average sale price in West Windsor, it came down a little bit this year to 709 through the first quarter. The average price is not coming down. It's just that we saw more condos. We saw profit taking in the investor segment. So people who had been sitting on some of these condos whose price doubled, they're taking profit and they're selling some of them. So that's all that really means. So there's more low price. So you can see the days on market is actually up slightly, 101%, but again, 63 versus 36. So almost a return to normalcy. Now, in West Windsor, it's a little bit skewed because there's a fair amount of townhouse new construction. However, you know, it's a return to normalcy versus last year, 36 was abysmal for a buyer. So Plainsboro, same school district as West Windsor, north and south. When you kind of look at this, it's the same thing. So 338 to 209, closed transactions 158 to 116. But again, and I don't know why I'm missing 2025, but the median price went from 576 to 832 in Plainsboro. So the single family average sold price, that's rough. Why is it so much higher in Plainsboro versus West Windsor? There's less supply. There's fewer single family homes. There's less supply. It's a higher price. It's basic economics. So again, affordability in 2018, 606, 638. Now it's 115. Still a huge house compared to Bergen County, compared to Hudson County, compared to Morris County. You're getting a lot more house for your money here. You're just that much further from the job center of New York and or Philadelphia. So days on market down, it's really unchanged. Plainsboro is pretty red hot. The number of single family homes sold, it's 25 through the second quarter. 61 was the year-end number in 2024. So we're tracking behind that in Plainsboro year to date, meaning if we don't pick it up a little bit, there'll be fewer single families sold in Plainsboro in 2025 versus 2024. It'll be the lowest on record. So the single family listed sale price ratio actually went up in Plainsboro from 102 to 103. So you can see the market there has a lot of legs. The condo market is at 696 in Plainsboro. There's been no relief for that market segment. The condo and townhouse days on market got worse for buyers and went down to 23. Why? It's comparatively more affordable than West Windsor in Plainsboro for condos and townhouses. But again, the number of homes sold, 78. Last year, we ended the year at 156. So we're tracking, pretty much the same, another pretty low year for inventory for buyers in Plainsboro. Not a lot of relief in sight. And again, the listed sale price ratio for the condo townhouse market is 101%. We're going to skip Pennington because I did not double check the data, so I don't want to present you wrong data. But again, the single family home price in Pennington, like we should all have bought two of them in 2012. We could have doubled our money, 481 to 853 in Pennington, and a massive spike in the last 4 years. Year to date, days on market is only 25 days. So it's not like Pennington used to be this sleepy little hamlet where it actually took a minute to sell a house. Today, it takes a minute to sell a house in Pennington. So here's the big picture in Pennington. Still no inventory coming to the market. There's only 10 closed single family homes in Pennington year to date versus 33 last year. Prices have gotten high. So it's just, I think the market's at a little bit of a standstill in Pennington as it is in other places. Still 102% asking price in Pennington. The condo townhouse price came down a little bit. It's wait till the end of the year before we true that one up. there's just a lot of cheap inventory out there. But you can see the condo townhouse days on market did go up a little bit, and only 9 have sold year to date versus 18 last year. So no like breakthrough in Pennington. It's not like, wow, the market opened up. Again, it's a small municipality. Hopewell is a massive municipality. It's one of the biggest in the county in terms of geography. And again, home prices have doubled from 2012. So 487 to 947 for the sold price. Days on market's at 33 year to date versus 2024. And here we are at 69 versus 70 versus 180. We're tracking fewer single family homes sold in Hopewell in 2025 versus 2024. So if you read the national headlines, you're seeing like there's nothing being sold, but prices are still high. That's because nothing's coming to the market, statistically speaking. So it's just that there's not enough inventory. So again, Hopewell's tracking well below last year for sales, which stinks if you're a buyer. And you can see the upward pressure on price in Hopewell for single family under $1 million. And here's the big picture. So in Hopewell in 2014 or 2015, 106 single family homes sold for the year, right? This year, 37. So prices have gotten to the point where there's just not enough affordable entry homes in the market. So, whether you're for building or against building, if you are a parent or you would like to be a parent and you want your kids to have a house, be pro building. I'm not saying be pro sprawl, just be pro smart development, because this is what happens when we stop building in the state, which we basically have. So we're really tracking a low number because just no affordable inventory. Prices have gotten outrageous. So again, the number of homes sold year to date, that's days on market. The number of homes sold year to date is 41 versus 136. So we're tracking less than half of the single families under $1 million in Hopewell. So there's just not enough entry level housing in the state, let alone Mercer County. And again, you can see it's 100% of ask price to get in. So, when you start looking at the single family average sold price above $1 million, it used to be at 1.9, but all those houses that were 1.9 in 2020 are now 2.4. So, the days on market has gotten precipitously low. And you can see like for 2024, the above $1 million home segment, 28 have sold this year versus 16 for the entire year in 2015. There wasn't that many luxury homes in Hopewell, right? So the biggest problem is what used to be 700 is $1.2 million. And there's really no relief in sight until we start doing smart development. So again, the average condo townhouse sale price, $699. Days on market, relatively unchanged, 16 to 24. But again, the condo townhouses sold brutal, 156 last year for the entire year, 70. We're tracking less than that. And we're coming into the slower transactional season. So the fall tends to be, more light transaction volume than the spring. So wasn't a great spring market for inventory anywhere. Matter of fact, the first 4 months of this year were brutal. It was basically buyers were just waiting. So Hopewell Borough, again, relatively unchanged. It's such a small municipality. I wouldn't say prices are coming down. It's just that some cheap stuff sold. Days on market still low. The number of homes sold is at 9. So we're going to end the year at 18 versus 37 in 2021. Brutal. There's just not a lot of supply in the market. And the condos, and there's not a lot of condos in that market segment. So we'll kind of skip over that. Robbinsville. I think Robbinsville is one of the most interesting municipalities in the county. And again, we should have all bought 2 single families in Robbinsville because again, if you bet me $1 in 2012 that they'd be at $1 million, I would have laughed at you, told you to sober up, and I wouldn't have called you an Uber because I don't think there was Uber, but I would have gotten you a cab home. Like nobody thought that would happen in Robbinsville. Well, Robbinsville built the town center, brought in restaurants, right? All of a sudden, it's this little, I was in Robbinsville today for a closing. It's a little mecca. So again, 454 to 994 through the second quarter this year. No relief in sight there. 38 days on market for single family homes. No relief in sight. A little bit better than 24 2 years ago. But again, the list to sale price ratio for single family homes in Robbinsville still is over 100%. So it's not it's like, wow, I don't have to pay 102. I just have to pay 101.2. So still very brisk. But this is the big problem. Single family homes in Robbinsville year to date, 22. sold. For the year last year was 109. We're just tracking well below that for supply. There's just not a lot of supply. So again, the condo townhouse, I would wait to the end of the year before this trues up in Robbinsville because there's a lot of stuff closing this month. Days on market, it's better than 12 at 45, but it's below normal of 85 or below normal of 65. So things are still selling very well and they're still selling above asking price. But again, this is the big picture. 49 units sold through the end of June. 114 sold last year. We're not improving is basically the message. Is our home prices going up? Yeah, unfortunately. Is the inventory picture going up? It's getting better, but it's not enough to break through the market is basically the problem. So Cranberry, forget it. It is insanely competitive in Cranberry. There's just not a lot of houses for sale in Cranberry. So you can see the days on market, yeah, like it used to take time to sell a house in Cranberry, 40 days. You know, it's incredible how the market has changed. But again, there's not a lot of inventory in Cranberry. So the 55 plus, again, used to be highly affordable, 340. So if I'm coming out of Bergen County, let's go to the little farm hamlet of Cranberry and keep 2/3 of our equity from when we sell our house. All right, well, now you're going to Delaware, I guess, because you're not doing that in Cranberry. I mean, that's the problem. And, you know, Cranberry, it does have new construction, actually. It's got a whole new, like, southern section of the main street. So there is development happening in Cranberry, but it's not enough to keep up with demand overall. So again, the number of 55 plus closed homes, 3 versus 12, it's pretty rough overall. But, you know, again, the under $1 million number of sold homes in Cranberry is at 6. It used to be 43, 43, 41. But all those 800s are $1.2 million. All the 700s are 1.1 in Cranberry. So it just kind of is what it is. It's the same picture across the state. 27 days on market for the $1 million plus segment. So it's not like there's a big relief. But you can see in Cranberry, to have $1 million listing back in 2012, it was like, wow, we have $1 million listing. Now it's like boring. The entire community is $1 million. So, you know, plus $1 million homes, you can see it's like every municipality. There's more selling in the high end than the low end because of the appreciation that we've seen across the market. Days on market still pretty brisk for condo townhouses. It's a pretty small market segment. So Lawrenceville, again, massive municipality, one of the biggest in the states, one of the most densely populated real estate environments in the state. In 2019, 329 homes came on the market. The low point, and by the way, this is through second quarter, the low point was 2023 with 158. We broke 200 this year, 178 last year. So it's getting better. Closed transactions in 2019 was 192. This year it's at 113. And again, the median price went from 309 to 510. So what does that mean? It means there's not enough homes for sale in Lawrenceville, period, like full stop. So it's really the same picture. Single family average sold price, days on market is low. The number of homes sold is tracking less than last year, which is incredible because last year was brutal in Lawrenceville. The condo townhouse market is pretty fierce in Lawrenceville. I do think it's starting to shift, meaning that if a house came on for 406 or 468 was the sold median or the sold average, and the seller puts the next one on at 525, they're going to lower it to 469 before they sell it, or for, 472. I think the massive appreciation's over. I think the appreciation will flatten overall in the county. But again, well, it remains to be seen for the end of the year. But again, this is the big picture. The condo townhouses were at 59. Last year was 137. Normal is probably 180, right, in that market. So it's pretty rough. Montgomery, the single family average sold price, it's not coming down, by the way. Montgomery has basically nothing on the market. So if you blink your eyes, you're going to miss it because that house probably sold. Supply is actually worse year to date in Montgomery than last year. Whereas the other municipalities, it's actually improved slightly. Montgomery, for some reason, has gotten worse. Nobody really wants to leave, I guess. They just want to stay there, which is fine. Days on market did trickle up a little bit. List to sell price ratio. If you don't bring a bid on a single family of 103.2%, you're not getting the house. It is what it is. Again, this is rough. So, last year was 113. This year is 73. So we're improving. But we'll probably end the year at like 140 to 150. So it'll be the third worst year since 2012 for closed homes in Montgomery. massively undersupplied market. So like, don't blink because you'll miss it. There was a house that we previewed the other day. I think I previewed it at 3, 6 offers came in by 5. It was gone. Like, nice house, but like it was over $1 million too. So very busy market. Condo townhouses tend to be very robust. I'm not going to spend a ton of time on it. Days in market came up a little bit, but again, the norm is about 50 days. We're at 28. So we have a long way to go to get back to normal in the markets. You know, Montgomery Woods used to be this robust little hamlet where things sold. It's gotten a little better, but like people are hanging on to them. Like if I have a 2% interest rate, I keep it, I rent it. It's like owning a bank. I have positive cash flow and I get to depreciate it and I get to write off things on my taxes. So you're seeing a lot of, you know, new investor activity in the market. So looking at Princeton. So Princeton is, I always say, even though it's not the county seat, things tend to revolve around Princeton from a real estate perspective. It's the most expensive municipality in the county. So in 2019, we had 301 new homes to the market. Last year was the low. It was tied with 2023 at 177. This year we're at 202. So is it better? Yes. Is it a breakthrough? Hardly. So when we had 301 homes on the market, we sold 128 of them. We had 202, we sold 120. So you can tell, like, there's still a lot of pressure in Princeton. The value of homes when 301 sold was 128 million. A third less is 204 million. So, you know, prices are up a third. Inventory and closed homes are down a third. And the median price went from 900 to 1497. The average single family home price in Princeton is 1.8, which is a new record, by the way, for the first quarter. So again, this is a second quarter only view of data for the single family home price. So again, it's 1.868 versus 1.675. And that is a pretty precipitous spike from COVID, right? 2020, 1.14, now it's 1.868. So, and again, the slide that I want to show you is this one. So single family units sold 95 versus 173, which is rough, days on market, but it's this one. So in 2017 for the year, 124 single family homes sold in Princeton, dropped to 90. 2018 was a bad year for some reason. Then it went to 118, 108, 114. Then it dropped to 16 through the second quarter of this year. So it's like, where did the starter home go? They went to the above $1 million segment in Princeton. So you used to be able to get, you know, a decent split level in Princeton for 800, 700. That same split level in Princeton with not a lot of improvement is 145. And if it's on a conforming lot where you can build a new home, don't bring a knife to a gunfight, because that's what it's going to be like to buy that particular house in that particular segment. So again, it's actually a little bit better because you don't have to pay 105.9%. You have to pay 105.1% to buy a single family below $1 million. But again, the average sold price above $1 million, but that's not the big picture. This is the big picture, right? So the number of homes sold 1 to 1.9 has gone up. It used to be, you know, it used to be a cause for celebration for $1 million plus homes sold in Princeton. It wasn't abnormal, certainly, but you can see in 2012 for the entire year, it was 55, spiked at 106. And then it's actually come down a little bit. The reason being in Princeton, and I'm going to fast forward to this slide, is there's a lot more in the 2 million plus bucket. So again, 2 million was the luxury price segment in Princeton. It was a big number, right? Now, 50% of the market in Princeton is above 2 million. It's rather incredible. So 11 homes for the entire year of 2012 sold above 2 million. 34 have already sold this year above 2 million. So you're on track for 70, which will be the highest number of 2 million plus homes sold in Princeton ever. So what does that mean? It means affordability is crushed in Princeton. It means you need to develop ADUs, you need to have smart density. And again, even in the 2 million plus segment, you're at 101.2% list to sell price ratio. It's not like you're going in there and getting a deal. The condo townhouse market, we should have bought 3 of these because they more than doubled in Princeton, 516 to 1226. Days on market still very low, 39. Why? Because they're comparatively affordable. However, fewer are coming on, right? Because people hang on to them and they rent them. I will say the Princeton rental market is pretty saturated. There's 40 homes for rent in Princeton on the MLS right now. So there's a decent chunk of rental inventory. So rental prices will probably soften. When that happens in the next cycle, the newer landlords will jettison some of that inventory because they're not going to make the same return they thought they would a year and a half, 2 years ago. So again, condo townhouses coming in for a pretty woeful year, tracking less than last year for sold homes. Pretty rough to buy. Washington Oaks has more than doubled in the last few years. And again, there's just not a lot for sale in the community. One just hit today, actually, but Governor's Lane, interesting, 719. And this was a community where I would say, and I don't know if this is legal, but I'm going to say it, it was a quasi-retirement community. It was a place when you sold your single family, you went to live. Very manicured. You didn't have to take care of anything. You didn't have to mow your lawn. It's incredibly quiet. It's impeccably maintained. And today I was on a home inspection for one of our associates, young family, rising freshman in high school. Why? Because it's an affordable segment of the market compared to, 1-2 for a single family. It's like kind of a busted up Cape Cod or a split. These are immaculate townhouses, immaculate. They're beautiful. So again, what does that mean? It used to be sort of sleepy in there. Like it was a selective purchase. I'm only going to buy in there if I sell my single family, but maybe I do, maybe I don't. Now it comes on the market, it sells immediately because it's a great place to live and people have figured it out. So not a lot happening there in terms of inventory. So, interest rates, so everyone's like, what do you think about rates? My prediction for the end of the year really hasn't changed. We're like in the 6.75 today. I do think we're going to end the year, I'd like to think, below 6.5. Will it make a difference? Yes, it will make a difference overall in the market, especially on a national level. They're talking about rate cuts in the second quarter. And this is not political. The president was at the Fed today touring the building, which basically means putting pressure on the Fed chairman, which is a bad idea. We'll see how the markets react to that tomorrow. But again, I do think if political disaster doesn't happen between now and the end of the year, and you never know, rates should end somewhere between like 6.4 and 6.5 by the end of the year. It's my same prediction as the beginning of the year. In terms of we're going to talk about my prediction for the balance of the year. It's going to be a return to normal. So what does that mean? If I have an affordable single family home, the most affordable single family home in Princeton, I'm going to sell it. If I have a single family home above $3 million in Princeton, I am going to sit. There is a lot of inventory. So traditionally, there was some rules in real estate, which I'm going to kind of revisit with you. You buy the worst house on the best street. Don't buy the McMansion on a house full of capes. Buy the crappiest cape of the crappiest cape collection on a street with one McMansion. They're all going to turn. And you have the greatest equity upside if you do that, right? So I do think we're going to have a return to normal, meaning the affordable condos and townhouses are going to continue to sell. In Princeton, by the way, affordable condos and townhouses are 700 to, as you saw, $1.2 million. In Lawrenceville, it's 300 to 500. The cheaper single families in the better locations will sell. I do think that some of the luxury market will slow down. It's not rate driven. I just think that people with, I'll say, the political situation right now are just kind of like, I don't have to buy that $4 million house and I'm going to wait. And we're seeing that a little bit. There's definitely a little bit more of a glut in inventory in every town's upper segment. So in Ewing, the upper price segment is above 500. That's where the upper price is in Ewing. That will be more challenged than in 2021. Than in 2023, where it was flying high. Will it sell? 100%. But you're not going to apply appreciation to the last sale. As a matter of fact, in Ewing, you're probably going to be at the market level of the last sale. Same thing in Montgomery. The super luxury, Montgomery is a little bit different, but the super luxury market eventually will soften in Montgomery. What is that Montgomery? 2.4, and above, 2.2 and above. The super luxe market in Princeton, which is about 3 million and above, will soften. It already has. In Lawrenceville, it's probably 950 and above, 1.1 and above. So you're going to see a return to normal. And the highest days on market will be in the highest price segments by town. The lowest days on market will be for the cheapest single families in the best neighborhoods on the best lots. So what does that mean? In real estate, location was a fundamental rule of real estate. I think it's back in vogue. As a matter of fact, I've always told people, don't buy crappy houses on crappy streets unless you get a really good deal. I think that matters again. I think that location matters. I think price matters. I think condition matters, because if we just brought a townhouse on the market in West Windsor, we sold it in 7 days. There was another, and by the way, it was meant, the sellers, they painted it, they staged it, they cleaned it up, they emptied it, we brought in furniture, it looked beautiful. The neighbors brought the same house on the market, same price, took them 57 days to sell it, and they got less than our seller did. So the fundamental rules of real estate, location, condition, lot size, the school, proximity to transportation, right? They all are coming back into vogue. I don't think rates are going to go much below 6.4, 6.5. I don't think we're going to have a breakthrough in inventory, but I will say, excuse me, I've been talking a lot today. My biggest pick is that I think we're going to see an end to the massive appreciation that we've seen since COVID. I've been wanting to say that for a while. I own real estate, so it's not like I'm happy about it, but you will see the end to this overall mass appreciation in every price segment. It'll be in the lower price segments, in the best neighborhoods, the houses that have the most upside potential. So that's the forecast for the balance of 2025. So, I always like to say, this is your PhD in the local markets, but at the end of the day, I think you're going to see a return to normalcy in the markets. You're still going to have bidding wars. You're still going to have things selling quickly. But I think that the buyer's income hasn't kept up with prices. And that's what I think is going to kind of hold the market back until rates come down below 6.5. It's 6.4 is not going to make a big difference with the market. So the question or comment is, single families are sitting on the market in Robbinsville, so inventory is there, but no buyers. Do you know why? So yeah, there are a couple pockets in Robbinsville where single family is sitting. Here's why. And, we won't do addresses, but if a single family home sold last year in Robbinsville for 800, and now you put it on for 875, the market hasn't appreciated that fast. So I think what you have to do is take a very deep dive into pricing. There are 9 things that impact pricing in every municipality. So, the biggest thing I can tell you is you have to know that as a seller, you have to know what those 9 things are in order to have an effective price. So, and there's 3 styles to pricing too, right? So there's what we call aspirational pricing, which means a house came on for 800, I put it on for 950 with the thought that I'll negotiate. Those days are over. We are in a return to normalcy. So if the last comparable came on at 800 and sold at 800, right, that's the market price. There's a concept called party pricing where I put my house on at 789 or 794.5. That's called a party price. So everybody knows it's a good deal. Everybody jumps in to take it off the market, and it allows the market to bid it up. So I think the days of where 800, 815, 825, 835, 845 are over. And the reason there's buyers, trust me, there's a lot of buyers. It's just the buyer's income hasn't kept pace with appreciation. And the buyers are like, I can't afford it. Rates are at 6.75, 6.8. They went up this week a little bit. I just have to wait, or I'll adjust my search, or I'll go to, Burlington County where it's marginally cheaper. So there are plenty of buyers in the market. It's just that income hasn't kept up with appreciation is what's happening. So the next question is, it seems like a lot of the houses that have come on the market above 3 million don't actually sell, or it takes a long time. Does this mean there's downward pressure on the ultra luxury segment, or is this just the reaction to the uncertainty you mentioned? So the question is there downward pressure in the ultra luxury? Having been in Princeton for over 20 years, no. Okay. If I have a $3 to $4 million house, it's probably, I don't have to sell it, right? And people that sell in that price range, I don't have to sell it. And why put it on the market? So is it downward pressure? No. Is it buyer choice? Yeah, but the cream puffs are still going to sell, like the new construction, walk to town, $3 million houses. The luxury in Littlebrook neighborhood is still going to sell. So is it downward pressure? No, in the luxury market. But yeah, you'll see, I think you're going to see a return to normalcy. So when I started in Princeton, the luxury market was $2 million, right? There was a lot of $2 million houses. $2 million is scarily become blasé, Now there's just more houses at 3 million. I did an analysis on my podcast the other day, just for Princeton. I can do anything anybody wants. They can always just shoot me a message, or if you're working with our associates, let them know what you want me to do research on. In Princeton, there was 57 houses for sale, right, at that particular day. Of the 57, 11 had been on the market for over 12 months. Of the 11, they were all above 2.8 million. Does that make sense? So yeah, it's a selective purchase. It's a selective sale. And I think if you, buy the wrong luxury house or buy the wrong house for the wrong reason. So Yvette, Lynn Marie says, I want to see the thing. All right. So let me show you the 9 things. Okay. Do me a favor. Well, hopefully you won't see my email. Let me do this. All right. So we'll talk about the 9 things in impact pricing. And again, by the way, this is Josh Wilton, 25 years of residential real estate experience in the market. Okay. So, in my experience, this is what matters. First things first, style of the house. So let's just take Robbinsville for a second, right? If a colonial comes on as a street and sells at $400 a square foot, and I own a split level on the same street and price it at $400 a square foot, I'm going to call myself an Uber because I've been drinking. Every style of house trades at its own price per square foot model. In Robbinsville, the houses that have the highest price per square foot are colonials. So you have to be very specific when you're pricing your house to only price it against like-kind houses. An appraisal will give you that phrase. It's like-kind house. So style of house is indicative of where it will sell. Price per square foot, it is the leading indicator of where a house will sell, period, bar none, end of story, the end. So what do I mean by that? If every single house comes on and sells, and let's just say in Robbinsville at $400 a square foot, and I list my colonial at $450 a square foot, I'm $50 a square foot above the market. I am not selling that product. It's the same thing as if you went to the store and saw your favorite box of cereal, but now instead of, I don't know what cereal costs, but now instead of $4, it's $20. You're going to go, screw that, I can't afford it, and you're going to walk right past it. However, if that box of cereal is now on sale at $3.50, you're grabbing like 30 boxes, right? Real estate's no different. It is an asset-driven market. So price per square foot is the leading indicator of where a house will sell, and it's tied to style. Absorption rate is an important number. It's a pace of sales. So if you're working with our associates, they'll tell you what it is. If you're not, this is why you should work with one of our associates, because we'll tell you what it is. Below 5 months is a seller's market. Above 6 months can indicate a buyer's market. They do change month to month, so it's just a number that we like to track. The condition of the house. So again, the colonial that sold at $500 a square foot had brand new paint, had all new door handles. Everything was updated. The electrical outlets were updated. They put in overhead lights. They took the crappy carpet out. They redid the floors. It's ready to move in. And that sells at $500 a square foot. I put the same model of the same colonial on with the carpet from when I bought it. You can't charge $500 a square foot if the buyer has to put sweat equity in to get it to the condition of the closing comparable. I hope that makes sense. So the condition matters. It had mattered less through COVID. I think it matters more. So if you bought a townhouse in 12 years ago, and you haven't painted it, you need to paint it before you put it on the market. Why? Because it's faded. It's faded. If you have a carpet from 25 years ago and you had 3 kids in the house and you haven't updated it, you need to update it. You had a party in the house and you didn't invite the market. So now you're going to go to the market and expect them to pay the same price per square foot as the seller who put all of that update into the property. It won't happen. You have to make an adjustment in price. Conforming versus non-conforming lot size. In Robbinsville, just because we're talking about it, in Washington Town Center, everything's built to the max FAR, meaning you can't make any of those houses bigger. On, Robbinsville, Edinburgh Road, you can probably get an older house, knock it down and build a bigger house. Happens a lot in the market. I'm not saying you should from an economic perspective, but when you have a lot that you can build out on, you have to bid to the future use of that lot. So in a townhouse community, not applicable. You're really looking at the first floor, condition, et cetera. So, but the future use of the lot is important, especially in the more expensive segments of the market. Beds and baths matter. It's about $50,000 a bedroom per appraiser, about $25,000 per full bath per an appraiser, about $15,000 to $20,000 for a half bath per an appraiser. So again, you can't overprice a 3-bedroom to a 4-bedroom price per square foot. It's not going to happen. You have to make an adjustment. So if you can build an ADU, which is only applicable in Princeton, ADU is a mini house. They're pretty awesome, but we're not going to go too much into that. We're going to do a seminar on that in August. And then we look at the assessment. So the assessment is a number assigned by the town. And what we do is we figure out where things sell in relationship to the assessment. So if every house in that community in Robbinsville is selling at a multiple of 1.6 of the assessment, so you take the assessment, times it by 1.6, everything's selling at that multiple. If I put my house on the market at a multiple of 2.0, I'm above the market. So you have to look at that because the assessment also takes into account condition. So you just have to look at that kind of thing. Now, taking this all into account, school district, proximity to the train, elementary school, neighborhood, age of the house, all of these things play into it. These are the biggest, more consistent ones that you deal with. And then obviously age, location, neighborhood, walk to town. So in Princeton, in Robbinsville, the town center houses have the highest price per square foot. The ones further away from town are lower. Why? Because on Friday night in Robbinsville, people want to walk and get a tomato pie and a beer. Like, I'd want to do that if I lived there, So that's what people want. And they're willing to pay a premium, which again comes out in style, price per square foot of the house. So hopefully that helps and answers your question. Let's go back to the chat. So Lynn Marie, those are the 9 things. You're welcome, Lynn Marie. You shared a ton of helpful info. Thank you. Appreciate the insight. You're welcome, Crystal. Any other questions, comments, concerns, feedback, good, bad, or indifferent? You guys are good? Okay. So the question is, how long should you stay at the home if you're doing renovations? I always tell people, as long as possible, as long as possible. And here's the thing, okay? So this is what I want you to realize about a house. It's sort of like a car in a weird way. If I buy a Colonial for $600,000 and it needed a new kitchen and I got it priced accordingly, meaning the ones in the neighborhood that had a new kitchen were at $680,000, right? $680,000, whatever. But the costs of the renovations are such that they're not cheap right now, right? So I have to spend $120,000 on my kitchen. So you spend $120,000, so now you're into it for $720,000, right? Did I do that right? The market's at $680,000. And when you put your house on the market 4 months later, you haven't added any square footage. You haven't made the house bigger. You just brought it comparable to the rest of the market, which is at $680,000. So you say, I want all my money back in my kitchen. The market may not give it to you right away. So how long should you stay at the home you're doing right? I always tell people, why do you have to move? You move, you stay put until, a lot of people that move, it's schools, right? That's a big thing. The people having kids, they're moving in, they're moving out, et cetera. But I would say as long as comfortably possible and don't overdo it. If the comparables in your neighborhood at X, don't invest X times X times X and go, hey, Josh, sell my house for X times X times X, because I'm going to say the market doesn't care. It's going to give you X. You don't want to overinvest in your house. You want to update it to the market and live in it. Like that's the game, unless you add square footage. If you add square footage, a little bit of a different game in terms of pricing. Any other questions? Okay. So you have the review. The review is brutal. The forward is return to normalcy. I think that the market will, I don't want to use the word soften and have people be scared, but it's going to be returned to normal. So what does that mean? Buy the crappiest house on the best block. It's always a good way to make money. And if you say, well, I don't want to live in a crappy house, buy the big house. But if you want to know how to make money in real estate, buy the crappy one. Suck it up, fix it up. It's got greater equity upside. So, you want to buy to the market, not above. So I just think it's going to be returned to normalcy in the market. I don't think this appreciation, we knew it couldn't continue. I've wanted to call the top of the market for over 2 years. So I am officially calling the top of the market, subject to the interest rate cuts and all that stuff. But I think we've seen the peak for pricing, and I think we'll see some normalcy on the go forward. Okay. I think that's it. Thank you all for coming. And we did record it, and we'll pop it on our YouTube channel. Okay. Thanks, everybody. And we'll see you, if not before, at the next one.